Okay, just getting ready. This is the second live stream. Currently on the 1 minute time frame. I've gone to the 5 minute and I've marked my liquidity zones, which are nice and easy today. I have one down here and one above here, and so the moment things kick off, well, actually I'll be going to the 1 minute time frame pretty certain now. I'll be waiting for, same again, sweep of the liquidity either to the top side or the bottom side, and then waiting for a nice displacement. Of course, monitoring those sweeps as we go, so we'll see. Yesterday wasn't great. Well, actually it was. I didn't catch it live because I did get a nice trade in on the downward swing. It cleared the low level liquidity, and then I was waiting for it to start to kind of bottom out, and then I just aped in on a market long. Turned out to be a very good trade in the end, so it wasn't bad, just didn't catch it live. Hopefully today, what's the news? I'm just gonna check if we had any unforgiving news. Let's see. Don't think there's anything too much to be crazy about today, is there? Let's just double check. No. Nothing too bad. No, all good. So, hoping today to be a better day. A little bit of transparency as well. I've just started a funding challenge, a trading funded challenge. So, it was a 25k challenge. I think it was $225. I just don't like it because it's on the MT5 platform, but it is what it is. And so I don't know whether to trade my own capital today, as this is still in that kind of phase of testing, or, you know, to trade, give it a go. I'll probably hold off, but we'll see. A few minutes to go. Yeah, this one feels pretty clear. I think today feels way more obvious where the liquidity zones are. So hopefully we see some. What I'd prefer actually is that we clear the downside liquidity and then come back up, nice displacement candle, come into a nice fair value gap, get the order in, and then we move to the upside. And normally what you get is that kind of New York Open fuckery for the first hour, where, you know, it frigs it one way and then turns out to go the other way. So we'll see. This isn't live on Discord, this one's neither, so just updating everyone. I've now seen if anyone's watching. Okay. What time are we on? A few more minutes yet. Just trading the open, first hour and a half. If we hit, great. If not, then so be it. Got me sad music on again, for anyone that likes this kind of stuff. Who've we got online currently? Anyone want to rear the ugly head? Yo, Roxas, my man. Feels very much like the pump wants to continue, that's for sure, because even though it had a nice sell-off, and I've got to be honest, I thought it was continuing to be bearish because it looked bearish, the structure looked bearish, but Asia just does not want to let things play out. Personally, I think it's to do with the fact that the banks are now accepting cryptocurrency, and so there just appears to be, you know, continuation of bullish momentum. So it didn't used to be like that. You used to always get big sell-offs in Asia. I tend to find, but seems to be different. Anyway, a couple of minutes out. Let's see how we go. I'm going to extend this a little bit so it's a bit more clearer. Just going to make sure I've got my ByBit account ready to rock, ready to roll, because I need to react to this quite quickly. We want a limit order, that's fine, leave that on as is. Okay, let's see what we've got, baby. I just hope this isn't as boring as yesterday. We see some nice activity from the get-go. But liquidity's clear. There's no misconception for me on this one. So yesterday there was a fair few bits of liquidity zones that could have been arbitrarily determined on what, subjectively, rather than where you clearly distinguish the liquidity, but this feels a lot clearer today. Don't think I guided too much clear yesterday on what the plan is, but basically, we want to clear the liquidity on whatever area, and so once we clear that liquidity, we mark that off as the high, and then we want to see the candle that clears the liquidity, the previous candle, we want to mark that as our displacement. So that's the point at which we want to see, the next 1 minute candle close below. And when I say close below, I mean the candle body, not the wick, because the wick would not be significant in terms of, the displacement. So that's what we're hoping to see. Okay, markets have officially opened, and as you can tell on the 1 minute, we're already at the bottom of the MFI, so there's plenty more to go for upward pressure. So it feels like it may come and trigger the topside liquidity first. We shall see. Nice small zone. If we clear this liquidity, my TP is going to be down here. Must remember to keep the phone close. As I say, my preference would be that it clears the below liquidity, because kind of feels structurally it wants to move and continue to the upside. The only thing that's slightly thrown me off is we also have liquidity here. So what I'm going to be looking for is, if we do clear this liquidity, waiting patiently for that displacement, because it could continue up actually, and I'm going to draw that out. I've got my magnitude on. I am going to make that reference for sure, because if we don't get that displacement candle and the price continues to push to the upside, then this will be the zone that I'll be targeting, and then this would be the below liquidity that I'll be targeting for my TP. Let's see. Now remember, if you're watching this on YouTube, it's going to be maybe up to 10 seconds or even 15 seconds delayed. Maybe not that long, but still, it's long enough. So if you're charting and you're doing your own trading, make sure you are watching your live chart, because if you're waiting for my entry, it might be slightly delayed. None of this is financial advice, of course. I feel like it's going to push up. It's always interesting when you're watching the minute candles because they look massive when you just see these big candles, but really it's not because it's the minute. It's just all relative to time, I guess. Okay, I'll push down. I would prefer it to come down here, really, to be honest. Yeah, so just a little bit of understanding on some of the terminology. So fair value gaps, obviously these are where you see a gap between three candles. So you're taking the wick, so this wick here and the bottom of this candle, let's just say, that would be what you'd call a fair value gap there. What that basically does is covers an area where there's been no trades in between the last three candles, and what it's kind of termed as an imbalance. So because prices move so fast with volume, it can in some cases skip orders, and so what, let's say, the algorithm likes to do is always revisit those gaps to go and fill previous orders. And so it's a well established idea that these fair value gaps tend to get filled. It's like the CME gaps and things like that, where you see days where, or a weekend, or it'll close for CME, where that gap will then always want to go and get repainted or refilled or retested for areas where orders may have been missed. So the idea here is that you are waiting to clear liquidity, and typically what is liquidity? It's stop losses, it is high leverage trades, it's breakout trades, it's those areas in the chart where there's more liquidity. And we know why liquidity is important. It's because more often than not, when you're dealing with large sums of money, large sums of Bitcoin, you don't want to trade where liquidity is low because price impact, slippage. And so this idea and narrative around trapping traders or trapping liquidity in certain areas allows much more flow of markets to move. And so it's always an idea to think logically about charting in general, and not so much be fixated on patterns, but more to think of them as areas where liquidity will be trapped. Because oftentimes I always think, if the price of Bitcoin, if you think about Bitcoin, this instrumental, immutable kind of concept where, money can't be faked. It's the best thing to easily come out of the last 5 years or however it's been going, on since. And so with that being said, why isn't the value of Bitcoin just always high? And the reason is because the markets get manipulated. And so the idea is that really it's just another instrument to allow trades to, or allow money to move. And so that's really what we want to capitalize on, this idea of working out where money can be seen. So let's see, starting to show a bit of a bearish structure now, isn't it? So if 1, 2, 3, 4, if that was some sort of an Elliott wave, this could be some sort of an ABC correction. But of course, if we break here, that would be a market structure shift as well. So I actually wanted to continue down. I wanted to break down here. What are we on? 8 minutes in, not too bad. It's a nice candle. The below liquidity like? You see, there's not an awful lot of, you know, you right down it here, back down to like the 30k if liquidity gets beyond here, but there's a nice order block. I've got to be honest, I do like to trade on days like this though. This is much better than trading with news events. If anyone, by the way, who's not in the Discord server, then get yourself on board. It's absolutely free. Doesn't cost you a penny. Link is in the description. Yada yada yada. Come on, baby. Definitely looks like it wants to come down. It's already the break of structure. Liquidity grab, push back to the upside, continue its move to the downside. I wish I could hit fast forward sometimes. So yeah, I've started a funded challenge. 25k, 8% needs to be met. Unlimited time frame, which I like. So there's not, you know, you're not defined within a specific time frame in which you need to get to that value by. And then what else is it? 5% daily drawdown, which I think's okay. I can deal with that. Not allowed more than 10% overall in terms of drawdown, so I think it's achievable. I really do, but I don't want to trade this specific strategy until I'm confident that my risk to reward ratio versus the amount of wins and losses is sustainable. So we'll see. I'll keep you updated as well once we get in that mindset. My guy Roxas wants to pump. Yeah, baby. What do we think well, here's a question for you. Do you think this is the bull run? Do you think we're going to go back down? Do you think we may come and test the lows again? What do you think? Personally, I think this is now the tail end of a C wave from a much larger ABC correction from the top down to that 15,600, and I think at some point soon, my thesis is around 32,800. I think that's where I think we top out on this run, and then yeah, I think we'll start to see some sort of a major correction. Now, whether we go down and test the low as far as the lows, I can't really say. I have to be honest, but you know, I don't think there's too much further to go on this specific run from that 15,600. So there. So just to clarify, day 1, 70% win. Day 2, 0 trade. Day 3, well, we'll see. I see a little bit of volume coming in. Five people watching, eh? And only Roxas is commenting. Who else is in the chat? A bit of consolidation going on. Come on, let's have a breakdown. Here we go. That first half an hour of the market start is always chaotic. But it's, yeah, it's kind of like that brink session fallacy of just entrapment, indecision, inducement, all the buzzwords. And so we just be patient. You know, for me, Mr. Gray, Dr. Gray, my friend, as liquidity traders, as I say, it's great. I find, and I think it's important this, I find, you know, I used to trade a lot based on patterns and support and resistance and things like that. And even without ICT, I'm not talking about smart money concepts or anything like that. The point at which you start to recognise that, you know, trading is really just about movement of money, and that sounds very obvious, by the way. I'm not trying to sound like I know too much what I'm talking about, but ultimately, when you understand how money flows, so what moves price, that's the most important thing. What moves price, and you see an order book, and you can see at what levels you've got, you know, resting liquidity. The most important thing to understand is when you understand what moves markets, when you see a thin order book versus a heavy order book, sometimes you can call it absorption, where there's an awful lot of liquidity stuck on an order book, and that can oftentimes provide you some sort of level of support or resistance without you even needing to draw lines on a chart. But yeah, money flow is massively important, and I think the inducement piece, again, for me, that was one of the things where, and I've said this before a number of times, it's like if the price that I think Bitcoin is worth and the price that you think Bitcoin is worth is, you know, constantly changing, well, that's so random. You know, it's like I'm happy paying price X and you might be happy paying price Y for Bitcoin, and so this constant exchange between buyers and sellers, you know, at any given time on any order book, should be completely random, but it's not. We see these patterns evolve all the time, triangles, flags, you know, so, you know, that kind of should say to you alone, okay, well, something else is going on that's not just about someone's perception of the worth of Bitcoin or, you know, Tesla, or, you know, pick whatever stock you want. The point I'm trying to make is something else is going on behind. There's manipulation. So you can see, when we see patterns, and it's not just the eye, because, you know, I know we're humans and we all pick patterns out in charts and whatnot, but they are genuinely patterns in everything you see, specifically on charts, and so that can't happen by chance. And so when you see these patterns always coming to, the kind of forefront, we always get these big liquidity sweeps where, you'll get enough liquidity built up on say an asymmetrical triangle, and then all of a sudden, you're thinking, okay, I'm going to short when it hits the top of the triangle, I'm going to long when it hits the bottom of the triangle, and life's going to be great. But every single time, you just get whacked out by, a liquidity spike. And so, if you're a newer trader, you might not understand that concept because you maybe don't understand liquidity and what liquidity is and why liquidity is important. And so if you are new and you're watching this, in the future or whatever, just spend some time understanding liquidity, understanding L2s, the order book, how money moves, and ultimately why the patterns that you see are nothing more than inducements to build liquidity, trap liquidity, almost like a spring. And then, when that spring is wound tight enough, you see these big explosive moves. And normally what you see is when you see these patterns that start to form, you tend to see the volume starts to drop in synchronicity with like the apex of a triangle, or you start to see this kind of shortening. That reduction in volume is because the squeeze is getting tighter and tighter, and then all of a sudden, woof, out of nowhere, you just see this huge move. And so you'd always normally hear this term, the thing that follows periods of low volatility is high volatility, and it's absolutely right. So, you always need to kind of be mindful as traders that is always on the cards, always. So, if you like to trade patterns, just don't get too familiar with them. Learn liquidity, understand things like XO charts. XO charts is a fantastic piece of software. I'll just kind of give you a quick understanding of it. XO charts it's almost like seeing behind the candle. What are we on, the 15 minutes? So, sorry. As you kind of look at these candles here, what you're seeing is the volume and the imbalances being 300% more liquidity on a sell side than the buy side at a specific point. And like if you take this as an example, so this is a bearish candle, right? And you can see, the majority, the point of control, which is where the most volume is traded on this candle, is right up here at the top. But then you can see all the buyers jumping in at the bottom end here, at the top end. And so there's an imbalance to the buy side. And what normally that means is what you're seeing here is aggression market orders. So clearly there's a bigger player absorbing those aggressive market orders. So when you see these kind of things happen, I better just quickly change because I'm seeing some activity I don't want to miss out. So what's fantastic about that is it really shows you behind what's going on. Like I see that candle there, I don't know where was the majority of that volume traded. What's the likelihood of that continuing versus reversing? Well, the way I can see that in real time is on something like XO charts, which is, again, something when you get more advanced with trading, you start to want to see more of, and it's a great tool. Another great tool that I like to use is Trading Light, because again, I like to see the delta between the aggression and the passive orders. Aggression being market orders and limit orders, and you look at what's typically is what you would call CVD, cumulative volume delta. But what it's showing you is if you've got a lot of buyers coming into the market trying to push the price up, but the price is not moving, gives you a clear indication that there's bigger players absorbing that pressure, and as a result, you tend to see, a move that'll just recoil and go the opposite way. So it's difficult to see this in real time. You need to kind of see this over a period of time, but it gives you enough idea about what the market's ready to do. And then lastly, again, another fantastic order book software is Bookmap, which is a heat map of the order book. Visually, it's really, you can see. I think I used to love Bookmap. But the problem with Bookmap is I think it's became too commercialized in the sense that you see a lot of spoof orders where big orders will look like it's coming in. You're thinking, okay, that will act as a nice absorption, i.e., it's going to take a lot of pressure to get past that level because there's so much limit orders in that specific pocket, and then all of a sudden, then limit orders will be removed, and again, it's all about manipulation. So again, just be mindful. Okay, but we are looking like we're going to move down. It looks like we're probably going to take the sell side liquidity, so we wait patiently. Okay, let's see. So, getting ByBit back up. So you've got a nice fair value gap there as well. Has anyone heard the song? He's like an independent artist. He's English, but he's actually Welsh. A lad named Ren. Song called Hi Ren. It's fucking brilliant. If you haven't heard it, when you've finished trading today, go on YouTube and type in Hi Ren. It's such a powerful tune. Are you guys in current trades now, by the way? Anyone trading? Anyone in a live trade? So just as a test, I'm not trading here, but like that's a fair value gap, and so would you short here at the top of the gap? Let's see if that would have been an entry. I mean, it's cleared 50% of it. Where would the liquidity be? Issue for me is if we come and clear this liquidity, the stop loss would have to be all the way down there, which wouldn't be great from a risk to reward ratio, if I'm honest. But let's see. Might just have to do this one by eye. Right within a volume zone right now, aren't we? Just there's the volume zone, this whole area here. Yeah. Here we go. So, just waiting for us to come down and clear this liquidity. Hopefully, nice big bearish candle, and then a nice displacement candle. Getting closer. don't know the block yet. So we'll need to break the block, clear the liquidity, reverse. Come on. Give us another push. Looks like it wants to go. Famous last words. Looks like it wants to go like. Motherfucker. Did squeeze past that old block. Sorry for the silence, I'm just there, just waiting, watching patiently. I always think when price works its way down slowly like this, you tend to get a bigger break of the liquidity zone, rather than, you know, if it came from here in one big long candle, you'd have probably got a big reaction. But I think we'll probably get a fairly decent break when it does go, if it does go. A little bit of consolidation. lot of indecision going on here. You see, all of this here now is just perfect liquidity traps. You got one here, got one here, here, and here, and so you can just tell. You know, I'm not trying to, but you can just tell it's going to come up and claim this liquidity. So it would be a perfect trade if we come down, sweep this liquidity, and then it just the way the markets go, right, you can just tell it will come and sweep all of this liquidity to the upside. There's your nice inducement line right here. You know, trade is shortened when we get to this point. You can see rejection there, rejection there. Obviously the second one created our channel, or our descending channel, and yeah, just has that kind of vibe. Mr. Inducement. Small liquidity grab, yeah. This is where the volume is though. These candles here. I come and claim this liquidity here. Yeah. So fucking close. Come on. I think live trading on YouTube is so fucking boring. If you're watching it. See if this comes back into the range. It's just a liquidity grab. Squeeze out some of those longs, shorts. To wait and save that until we actually get an order in. That was more appropriate. Come on, we don't need to go that far down. Let's have another little retest of that order block. And then blast through the liquidity. And a nice little swing failure here of this level. So it's still technically bearish. Oof. Nice volume on that candle. That one back in the middle. Okay, which way do you want to go, baby? Remember, this is all rules based, so be very easy to try and jump into trades, but got to follow the rules, really. But you could tell, I mean, look, I wanted it obviously to come down to here, but you can tell whenever we get these kind of inducement zones occurring here, at some point you're going to get a break and, you know, clear out the liquidity, each of these levels. So, you know, was this more of a run just to build more liquidity, to only, you know, go back to the upside before it moved back down? I would have thought it would have continued down first, to be fair. I hope very soon, frontman. Having said that, I'm not in any swing trades, and so I don't care what Bitcoin price goes to now, to be honest. I've been vibing with this this day trading setup for a bit, so I want to see how it goes. We are pretty much halfway between the liquidity, and so let's see. I do care. I care for you. I hope you I want you to get your break even get your break even spot, but in the interest of the way I've been trading, I don't specifically care. Because I guess as a scalp trader or day trading, you know, price is price, and longer term, you know, it doesn't matter, does it? You're just looking for opportunities to trade. And the idea about this is that, you know, once you set your buy and sell side liquidity, it doesn't matter if it's sell side or buy side. What you're waiting for is to clear out that liquidity at whatever level, and then you're looking for your reversal from a fair value gap. But these setups, these are high probability setups, but the setups don't present themselves every day, which is yeah, it's the pain in the arse part, that you've got to be patient, and it's shit being patient, because I am not patient. I'm far from patient, to be honest. But I've been down the rabbit hole of so many different ideas and concepts and ways of trading that like many probably, by the way, it's very easy to just flip-flop between ideas and not really give anything any consistency. So I think it's important to give something a chance, even if it is boring. Maybe I don't record the sessions and I just trade it, you know, over a few months or something like that until I get a good P&L. But, you know, if you guys are turning up and you like it, then I'll keep doing it. Otherwise, let me know also if it's boring, because I don't want to be putting this out there if no one's interested. Back in a sec. Okay, back. Okay. Make your fucking mind up, Bitcoin. Come on. Just give me something to dance to. Oh, it must have heard me. We need volume. Lots and lots of volume. So unfit, I just ran up the stairs and fucking panting. I can't wait for the Foxify platform to come out. I really can't. It's gonna be epic. June, Foxify. Need this to break this. And then this will have been just a liquidity run of the two areas here. I'll tell you what, by the way, yesterday, right, so let me just, I don't want to change it right now, but yesterday, right after I shut down the live session literally within like a few minutes, the huge red candles started to appear. And if you remember, I've marked out some liquidity zones, and I had an upper and a lower and a couple in the middle. The lower liquidity, the kind of the initial low liquidity, the sell side liquidity, got took out, and I think it went down to like 29,650. I got in at 29,710, I think, if memory serves me right. But it was very reactionary because I was watching it as it was playing out, and I could see it that whenever you get this, these big swings where you get a lot of volatility and a lot of movement, they're very much not sustainable. They don't sustain themselves well. Normally, when you see a true breakout, you see a kind of a lollygagging down to a point, so nice small candles and then a huge break. But this was like 3 or 4 breaks, and then it started losing a bit of energy. So I dived in, and then I rolled it up to 29,950. So it was about a 73% move. Obviously not captured, but it was very much the way I trade anyway. It was based on liquidity. It had taken out the lows, and then it continued down. Sorry, it reversed itself back up. See, for me, whatever plays out here, if it takes the liquidity at the top, I think the overall day will end up bearish. If it takes down the sell side liquidity, the overall day will probably end up bullish, because that's where the majority of the liquidity. You can see here, look at the size of these candles. That's there's a lot more liquidity at this zone here. And up here, you can see here we had a nice liquidity. So that's naturally where the liquidity is. If we go far back here, again, we've got lots of liquidity here as well. Obviously, where the peak of this candle came through. So, for me personally, it will be a more challenging trade up here, because we've got a little bit of uncertainty around where the true liquidity would be. I guess so. It's going to be very frenetic and fast, and we just need to see and watch and kind of see how the formation goes. So stick with it. Next zone's got a break. See it. This whole structure here looks very corrective, doesn't it? From the pump. Okay, there's a break of that one. So going for it. Here's your market structure shift. Okay, get ourselves ready. Looks like it wants to go. Time we on 3:30. Getting close. Another push. Won't say your liquidity, you know you want to. Go on. Fucking teasing me. Keep going, baby. Here we go. Take your liquidity. Yep. Okay, liquidity taken. So, here's the important part now, right? Is this going to be the point at which we take liquidity, or are we going to take it up here? Now, here's where we need to just little bit patient. And then we're going to wait. Okay. I hope it takes the top liquidity. That would be a better liquidity zone for me, in my humble opinion. Okay, so fair value gap. No, continuing up. It's fine. I would actually hope this would be a better liquidity, a much clearer liquidity zone to take. Okay, let's see where this finishes. Leave me a gap. Oh, you fucker. No trade. No trade. This is now invalid. You can only trade when there's a gap. There's no gap. But it's fine. Could be this liquidity here, which is better. Two-legged pullback. Come on. Another push to the upside. Order book's going fucking mental to the buy side. It looks like it wants to continue to push. We're gonna get it. Last push. Here we go. Here we go. Here we go. Yeah. Okay, so what's the next candle got? Here's where we be patient now, right? Have to wait. Okay, want this to finish close above this liquidity here. Next candle to be red. Okay, so fair value gap is here. Don't close, below. 35 seconds. Looking good, guys, looking good. Order I'm going to put at the top, which would be 30,365. Okay, order is going to be long. I'm going to go there. Stop loss is going to be underneath the low, so that's at 30,000 and 370. Okay. Risk to reward. We'll see. Needs to come and tag it. Your next liquidity here. What's that? It's not massive risk to reward ratio on this one. Nice wick down, be good. Something like this. Come on. Keep pushing. Go on. Okay, just filled my order. So we're in. So now we want price to come up to here. Our stop loss is just at the just below the low here. Here we go. You see, I only wanted to go, I mean, this may come down further, but I only wanted to go to the top of the fair value gap, just because I wanted to make sure I got filled on this one. Realistically, what I would have probably liked to have done is the bottom of the fair value gap, just to give you more safety. But because me what's the name? What was I gonna say? I lost my train of thought. Oh yeah, because my stop loss is still below the lows, I'm happy to take it. the next liquidity zone be then? It's up here, wasn't it? That's the high. Currently in about 7% profit. Oof, smack back down there, didn't it? He's now gone. So theoretically now, I mean, I could switch off and, you know, I'm in the trade, and one way or the other it's either going to hit me TP or it's going to hit me stop loss, and either way, you know, it's baked into the ByBit platform. So, but this would be nice because first day I traded this system, it was a nice 70% move just because of where the liquidity was. Day two was a bit of a rubber duck, but I don't know how much to put that down to. CPI data, and this is day three. But we'll see. It literally just took the nib of the fair value gap, so, you know, I'd probably anticipate that it would have took more than that. But I guess the point is, you know, if you're getting more winners than losers, and even if you're not trading, you know, even if you'd have a day where you don't get your trading because conditions don't allow, well, that's fine, isn't it? Really, you can take that, because I guess it's just about, you know, building steady. And to be fair, if it did come down here into the order block, sorry, not the order block, the fair value gap, you could add more into it. Add to your trade. It's there. Currently about 12% up. There you go. Oh, that was so fun. So that was it. Successful trade. So yeah, all out. What was the actual? Let's have a look. All orders. 36.21% move. I was at 100x leverage on it. So not bad at all. Let's effing go. Day 1, success. Day 2, rubber duck. Day 3, success. Let's fucking go. Right, and that's it. My trading day is over. That's all I needed. Looks like price wants to continue to push up. The next one is here. This is that high, isn't it? So I will be there. Looks like it wants to break it. I'd be tempted to actually get into a move to the downside there, but anyway, it doesn't matter. Okay, guys, that was fabulous. Really enjoyed that. Thanks for anyone that's tuned in. But yeah, looking so far so good in terms of a strategy, successful wise anyway. So as I say, if this is something you want me to continue to do live, try and explain what I'm thinking, what I'm doing, let me know. And yeah, speak to you